Euro dollar. So while the euro holds below 110.60, the pressure remains on the downside, and the focus is on a break of near-term support at 107.11. A break below 107.11 will then do a good job of accelerating declines back towards the key December base at 105.21. At this point, rally should continue to be very well capped ahead of 110, while only back above 110.60 would compromise the current bearish outlook for the euro. Sterling dollar. So cable is doing a good job recovering out from near 7-year lows at 140.80, and there is room for additional recovery over the coming sessions as technical studies unwind from severely oversold readings. At this point, look for the possibility of a move back towards the 145 to 147 area, from where the next lower top will be sought out ahead of a bearish resumption. Only back below 40.80 at this point would put the pressure immediately back on the downside. Dollar yen. So dollar yen is doing a good job of recovering out from recent lows after just taking out the previous August base at 116.30, trading down to 115.97. At this point, there's risk for additional upside, though while the market holds below 120.65, the overall downside pressure remains intact. Euro Swiss. So Euro Swiss continues to edge higher as the market focuses on a retest of the key September high at 110.50. A break above that 110.50 level will open the next major upside extension towards the 115 area further up. At this point, any setbacks should continue to be very well supported, while only back below 107.15 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie has done a good job of recovering out from recent multi-year lows in the 68.27 level, with the market now trading back above 70. At this point, though, any recovery is classified as corrective, with rallies seen very well capped into the 71 to 72 area in favor of a lower top and fresh downside extension. At this point, only back above 73.85 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has finally seen a nice heavy pullback following the break to fresh near 13-year highs at 146.90 last week. At this point, there's risk for additional correction in this market towards some previous resistance now turned support in the 140 area, while setbacks could still extend even further down towards the 138 area. But the highly constructive outlook remains intact with this strong uptrend, and any setback should be very well supported on a close basis above 138 in favor of the next higher low and bullish resumption. Kiwi dollar. So Kiwi has seen a bit of a bounce out from recent lows at 63.47, though overall the downtrend here remains intact with rallies seen very well capped. At this point, look for the rally right now, this corrective rally, to be well capped towards the 67 area, with deeper setbacks seen below 63.47 and back towards that 2015 base, the lowest levels that had been seen since May 2009 at 61.30. SPX 500. So the S&P 500 has broken back above recent resistance at 1900 after the market had cleared some critical support, that previous August 2015 base at 1834, trading down to 1811. At this point, there is risk for additional corrective upside in this market, though any rally should now be very well capped by previous support now turned resistance at 1993 in favor of additional declines as this market continues to show signs of a major top. Gold. So gold continues to be constructive and looks to be carving out some form of a meaningful base after taking out in early January some critical resistance at 1100. With the market now back above 1100, look for a push above recent highs at 1112 to confirm or strengthen this outlook and accelerate gains and opening the next upside extension back towards the 1200 area over the coming weeks. At this point, any setbacks should continue to be very well supported above 1070.